Into equity funds last month, one of the largest in years. $77 billion poured into equity funds in November. And according to ETF Trends, $510 billion moved into ETFs in 2020. That's on pace for the biggest year ever. Are we setting up for another huge month for stocks? Joining us now, Chris Davis, Chairman and Portfolio Manager at Davis Advisors, and Mark Smith, Vice President and Portfolio Manager at UBS Wealth Management. Gentlemen, great to have you both. Chris, I'll start off with you. In terms of these flows, what does that tell you, if anything, about where we are in the markets, particularly as we sit right at record highs here?
Well, we're really in a tale of two markets. I mean, it's sort of amazing that when you really recognize that 5 stocks have generated 2/3 of the total return of the S&P 500 this year. So you really are in an opportunity where you have this bubble sort of valuation for areas of the market, but also areas of the market that are really on sale today. And I think that difference between growth and value, with the growth index up 32%, the value index down still for the year, the financial index down almost 10% for the year, got some real opportunities in this market.
At the same time, you like the areas of the digital economy, and some might argue that's where the valuations are stretched the most, as opposed to the value side, which it sounded like you like the value side of the equation here.
Well, I do, but I would also say that you've got to break out both of those categories. In the growth category, you have to separate out growth pretenders or unproven growth from the growth stalwarts. The differences between the Zoom that you mentioned earlier and the Googles, it's just night and day in terms of durability, resiliency, growth stalwarts. On the value side, you have to distinguish between what we would call resilient value, think of the financials, and then really speculative value or value traps. Think of a lot of the industries where you're really betting on the timing of the recovery and hoping they can skirt the edge of bankruptcy.
Yeah. Mark, as we are up here with higher valuations, people are looking for value, and we have seen that sort of rotational trade take place. And Chris is making the nuance of it. And I think a very important distinction between types of value, types of growth. Mark, in your view, what are some of the things in the market that look interesting to you right now? And what are some of those value traps that you think investors should really be aware of?
Well, thanks for having me on, and happy holidays to everybody. I think that there's a lot of potential in the healthcare sector right now. Everyone's talking about the vaccine and 95% efficacy. I think that this is going to be a home run in 2021 and 2022 for these healthcare companies. Biden and his plan is going to be somewhat thwarted because of the Senate, and they're not going to be able to, I think, do this robust healthcare initiative that was once feared in the healthcare industry. And so I think the healthcare sector really does have a lot of potential growth in the coming year and 2 years.
Yeah, and in terms of value traps in the market, because I think with so many investors pouring money into the markets these days, they've got to be aware of what might look like value, but really are just traps.
Yeah, I think that right now you have to look at some of the tech stocks. We've even seen some of the tech stocks today have huge declines. I think there is not as much upside as there was.
Shepard Smith here. Thanks for watching CNBC on YouTube.